In this video, the latest in our jargon busting series, we're going to look at trade size, the idea of trading in units. How much is your risk and how big are you actually trading? Hello, I'm David Jones and this is the latest video I do with Trading 212 on trading terms, where we try and break through the jargon in financial markets to try and explain things as simply as possible, because stuff doesn't really have to be that complicated. This time round, I thought we'd look at trading size. Now this can be quite a difficult one to get to grips with in the beginning, particularly if you trade a market that you've never traded before, or you're trading with a different broker who's maybe got a different approach to how you size your trades. I think the easiest way of explaining it, we're going to look at how it works with Trading 212. If you're trading, for example, 10,000 units, how big are you actually trading? So first of all, we're going to go through an example. Then we're going to look at a trade I did the previous day. Then we're going to do another trade. Okay, so let's go to the example first of all. I think the best way of explaining this is to actually do it for real. But before we do that, there's a trade I did yesterday and we'll do a real trade in a second. But let's just talk through the principles of this. Let's use pound US dollar as an example. We're trading on the Trading 212 platform, and the example we're going to use is a 10,000 unit trade. So if we do a trade for 10,000 units, it's a $10,000 position. So what does that mean for trade size? The important thing when you're trading, I think, is to know what every 1 point move in the underlying market is. So if we're trading $10,000, let's just look at this just so I can explain what a 1 point move means. So with this 10,000 unit trade, if the market, pound US dollar, goes from 138.99 to 139.00, there is another decimal point here, but we ignore this because it goes to 4 places on pound US dollar. That's the way of quoting it traditionally. So 138.99 to 139.00, that's a 1 point move. With a $10,000 position, that equates to a $1 move in value. So if we bought it here and sell it there, we make $1. If we sold it there and buy it back there, we lose $1. So basically every point move is $1. But this stuff, I think, is much easier to explain when we look at the real example. So let me show you the trade that I think should still be running that I did yesterday. Right, so here's a live account. This is the trade. The trade I did yesterday, just to explain maybe the theory behind it, why I did it. I did it to demonstrate what a 1 point move is. But I bought basically here yesterday. Hopefully you can see that. Let's just click to zoom in a little bit. So I bought in here. You can see by the dashed line where I bought in. And it was basically, I thought this was a false breakout. We've done a video before on trading false breakouts, so you might want to have a look at that. So we'd have a level that had held the market up all morning, and then pound US dollar slipped below this level, but very quickly came back. So I bought back in thinking, well, okay, if it's a false break, I'll have my stop loss below the low. That was the reason behind the trade, and at the moment, the trade is still running. So here's the trade down here. Pound US dollar, 0 spread, so there's no actual bid offer spread here. So I bought 10,000. I bought at 138.76.3, but it's actually 138.76. Okay, that's the level I bought at. The market's currently 139.92, so it's 116 points in my favor. Obviously that will change in real time. My margin requirement, we're not going to worry about that today. And there's my profit. So my profit is £83 on this trade. So the market's moved 116, 118 points, whatever it is. Let me just break that down so we can see what each point movement. Just remember, it's a 10,000 unit, $10,000 position. So what I've done here is taken a screenshot so the price won't be moving. Okay, so we've got 10,000 position, pound US dollar. We're up at the moment of the screenshot 119 points. So because we're trading $10,000, every point is worth $1. So that's $119 profit on the trade, which translates for my account, because it's in pound sterling, back to £84.88. If I'd have done, for example, a $100,000 position, then every 1 point move in pound US dollar translates into $10. So that would be £848 profit. So hopefully that explains a bit better how this units idea works. So hopefully it's all becoming clearer, but I've got a handy shortcut tip for you. If you're trading a new market or you're trading with a new broker, to find out how big you're actually trading before you place a trade, let's have one last look at the platform. So we're back live. Here's the account, here's the existing pound US dollar trade. Let's say I wanted to do a trade on gold, but I wasn't sure what a 1 point movement in gold is. If you've got a live account, it's really easy to go to the drop down list here and switch to practice. Let's do that. So we're now on the demo version. There's an old trade in there. I can't remember why I did that, maybe for a previous video. So that's still going. But let's say I want to trade gold, but I'm not sure how much I want to risk. Let's bring up the detailed trade box for gold. So what I'm going to do, I'm going to basically do a demo trade to help me figure out what a 1 point movement in gold is. So I'm going to buy 10 of gold, 10 units, confirm buy. There we go, it's done. So I've bought 10 on my demo account. I've bought 10 at 13.2948. Again, what I'm going to do is just take a quick screenshot to freeze this, then we can figure out the values. So here's our screenshot, and here's the gold trade. So I bought 10 at $1,329.48. The market is currently $1,329.34. So the market is, what, 14 cents lower than where I bought it. So what does that translate into in terms of profit or loss? On my account, I'm just losing just over £1. So in dollar terms, to do the maths quickly in my head, it's about $1.40. So the market's dropped 14 cents. In dollar terms, I've lost $1.40. So each 1 point movement in gold, if I'm trading 10 units, equates to 10 cents of risk. So I hope that makes sense. Let's just go through that again. The market has dropped 14 cents here from where I got in. I'm down about $1.40, so a 14 cent move, losing me $1.40 is 10 cents per point. So I now know, well, if I trade a 100 unit position in gold, rather than being 10 cents for every point move, it's going to be $1 for every point move. So this demo, this practice account, having that tied to your real account makes it very easy, if it's a market you haven't traded before, just to do a quick dummy trade like this to figure out, okay, what exactly is a 1 point move in this market. And that's it. I think in the beginning, it can be confusing, but once you've done a couple of trades on the markets that you're going to trade, it does become second nature, knowing how large or how small to trade, depending on your level of risk and your trading account. And that demo account tip, I think, is a great idea, even though I came up with it, to find out just how big your risk is going to be. We'll start wrapping things up there, but as usual, if you have any questions or comments, or you're still not sure, leave us a message in the comments down below. We do read all of them. If you like the video, click on the thumbs up, and to never miss out on the stuff we produce during the week, we look at markets like euro, gold, oil, the cryptocurrencies. We do a trading strategy video as well. So if you're not subscribed, click on the subscribe button there. And if you click on, there's an alarm bell notification thing down there. If you click on that, you get automatically notified every time we upload a new video. But for this week, we'll leave it there. So from me, David Jones, and Trading 212, I hope you have a good trading week.